Dr. Kim Anderson joins us now, our crop marketing specialist. Kim, we want to talk about corn and soybeans today. Let's start with a little bit of historical perspective on the base prices so we have kind of a starting point for the discussion on comparisons.
Well, you look at historical prices. If I tell you, bean prices are $11.70, what does that mean? Well, if you go back and look at corn for the 2009 through 21 years, the average Oklahoma price was $4.20. The low price during that period during harvest was $2.75. That was in the 16 harvest, and the high price was $7.10. That was in the 19 harvest. Now coming into soybeans, $10.20 is your average price over the 9 through 21 time period. Your low price was $7.50. That was in the 18 harvest, and the high price was $14.80, and again, that was in the 2012 harvest.
Let's talk now about current price levels.
Well, looking at current price levels, you got corn at around $5.75 for forward contract in the 22. $5.20. That's a minus 15 basis off of that November 22 price. Milo prices are running about, for the forward contract, 15 cents below corn, a dime above corn for the current price. Soybeans, $12, relatively good price there. Forward contract for 22 delivery, $11.70. That's minus 75 under that November 22 contract. You've got cotton coming in at $1.02 a pound. Way to go, cotton. And harvest for the 22 crop right now around 87 cents. That was that November-December cotton contract at 90 cents and a 3-cent basis there.
Why are we seeing relatively high prices?
A lot of people are asking that question because we've got record corn world production and record soybean world production. Corn production, 47.6 billion bushels compared to 44.2 in 20. The average is 43.9. Major production. You look at the United States on corn, a record 15.1 billion bushels. Soybeans, 14 billion bushels on the world. You go back to 13.5 in the United States, 4.4 billion bushels, not a record, but close to it, and your average at 4.2. So excellent bean production. Again, it's a demand situation. You've got increased demand for your corn and your beans and your lentil products, and that is driving up our prices.
Let's talk now about how the U.S. fits into the world market.
You go back 20, 30 years, U.S. is a major player, but right now the United States exports 31% of the world's corn exports. Brazil and Argentina export 40%, and Ukraine exports 16%. In other words, Brazil, Argentina, and Ukraine export 56% of the world's corn exports. If you look at competing with the United States on corn, you've got Brazil and Argentina, in the spring and summer months when we've got ours in the ground, and you've got Ukraine that's harvested about the same time as the U.S. crop, competing with us in the Asian countries and the European countries in North Africa. So we don't carry near the power we used to. We're a major player in the corn market, but don't have the strength and price discovery as we used to. You look at soybeans, 32% of the world's soybean exports. Brazil alone is 55% of the world's soybean exports. Argentina, right there is 58% right there. Those countries, they sometimes double crop with the soybeans and with the corn, which competes on the world market. Plus, between now and the harvest in 22, the southern hemisphere, Brazil and Argentina, will harvest both corn and soybeans and put them on the export market. That could potentially drive our prices down. So as we look at our price going on out to, say, the 22 crop, I think there's more risk with corn prices and bean prices than there are with wheat prices. Remember I said last week that wheat prices should hold relatively strong? And so Brazil and Argentina crops will put pressure on U.S. corn and bean prices between now and our 22 harvest.
Okay, Kim, thanks a lot. And from all of us at Sunup, of course, happy holidays, Merry Christmas to you and your family.
And to yours.
Okay, thanks a lot.